Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be talking about a little bit of price action that we've seen come out of Bitcoin here over the last couple of days. Because we talked about this bearish pennant which Bitcoin was in, where Bitcoin broke bearish, but changed its mind and turned around and ran all the way back up to the top again. And this is where the fun begins, because Bitcoin started trading sideways, but Bitcoin actually had a nice little rally here over the last 24 hours or so, running all the way up to $6,380 here on the Coinbase chart, and a little over $6,450 here on the Bitfinex chart. And that actually is a very interesting development because it puts us and kind of confirms that we are now in a little bit of a triangle consolidation pattern that we're going to be discussing, this one right here. And there's also something very interesting happening on the Heikin-Ashi chart that hasn't happened in a couple of months that I do think indicates we may be about to see a little bit more bullish price action following what we've seen right now. So without much further ado, let's go ahead and get right into the video. By the way, if any of you guys got the reference that I made in the introduction, tell me in the comment section down below and drop a like. I bet like one of you guys got that. Anyway, without much further ado, now let's actually get into the video. If we come back here to the actual the Coinbase chart right here, we'll see that Bitcoin did have this nice little rally right here up, and we've been descending a little bit over the last couple of hours, but we do seem to be setting a little bit of a bottom in here over the last few hours from when I'm recording this. Now, there is quite a bit of stuff that there is several things that we're going to be discussing on the Coinbase chart here in a second, but let's go ahead and do the crypto market recap to start with. One thing that I like seeing is that Bitcoin's daily volume has been slowly creeping back up here over the last couple of days. We've seen Bitcoin's daily volume hover around $3 to $3.5 billion for quite some time here. As you can see, volume has been very low. We've seen volatility drop off. We've seen retail interest drop off, retail investor interest drop off, I should say. We've seen a lot of things on the market, a lot of the fundamentals in the market as a whole start to taper off, and volume, of course, is one of them. So it's very nice to see one of those fundamentals starting to come back up a little bit. Of course, Bitcoin could very well be trading, or could very well have a volume of $3 billion tomorrow, but it is nice to see that Bitcoin's volume is coming back, especially leading into what we're going to be discussing in today's video. But across all exchanges, Bitcoin is currently trading around $6,350, just down by about 0.5% over the last 24 hours. And Ethereum's trading below $200, looking like Ethereum is going to be setting $200 as a level of resistance. I have been meaning to talk about Ethereum in the last couple of videos. We've seen Ethereum get it back up here, but we're seeing Ethereum trade around $200 right now quite a bit. I would like to see Ethereum stay above $200. As you can see here on Bitfinex, it is above $200, but across all exchanges, it's trading on average just a little bit under there, down by about 0.37% over the last 24 hours. Now, I'm not really concerned about any of these cryptocurrencies because I do see a little bit of bullishness coming out of the technicals for Bitcoin, which we're going to be discussing here in a second. So I do think they're going to continue doing pretty well, or they are going to start doing pretty well, supposedly, I suppose I should say, if Bitcoin does. But if we sort by change over the last 24 hours here, we can see Ravencoin is actually up by 20%. Very, very good day. As you can see, Ravencoin has been declining for most of the week and has had a nice little pop off here, trading at around 5 whole cents. If we scroll down here on crypto, on CoinMarketCap, we'll see that the market is mostly split. We see a little bit more green than we do red. Dentacoin being down 23%. Not a great day for Dentacoin. But we also, one thing that I want to point out is that the green that we do see isn't very deep. We don't see some very deep green. We see a lot of 2 or 3% gains, not several double-digit gainers like you might like to see up here. So the market is pretty much flat, but we do see some green, we do see some red, just a little bit more green than red. Anyway, with that out of the way, let's go ahead and get back to Bitcoin and talk about what we want to discuss here in today's video. Now, this is actually what I'm talking about here is going to show up better on the Bitfinex chart. And you guys know that I haven't really been using the Bitfinex chart very much lately because the price action for Bitcoin on Bitfinex has been slightly manipulated because of Tether. And if we sort by market capitalization here, we can see that Tether is still not trading exactly where it's supposed to. But overall, Bitfinex is where I'm going to be showing you this because it shows up more obviously on the Bitfinex chart, although what I'm about to show you does show up on the Coinbase chart as well. One thing that we have to talk about before we get into this is the uptrend of support that we're looking at here, because this uptrend of support right here, this is a very important uptrend of support, and I've talked about this in many videos, so I'm going to be brief, but this is extremely important because this constitutes the trend for Bitcoin to be setting consecutive higher lows. Like I said, I've talked about that in so many videos. I'm not going to rehash it, but just keep in mind that that's a very important uptrend of support that we don't want to break. And a very important downtrend of resistance is the one that Bitcoin has been under for the majority of the year, this one right here. Now, I talked about in a previous video video how I wasn't putting that much weight on that downtrend of resistance anymore because we've traded straight sideways out of it so many times. But that's okay because we don't even really need this downtrend of resistance for what I'm talking about here, because what we see in the Bitcoin price action right now is we see a bit of a downtrend right here. We see a bit of a downtrend right here, a little bit of price action got above it over here. But right now on both the Bitfinex and the Coinbase chart, we can see that Bitcoin is currently in this triangle consolidation pattern and is coming very close to the end of it. It does also show up on Coinbase. I'll go ahead and show you. As you can see, you draw it a little bit differently over here. We'd see some resistance right there, and we would actually see that Bitcoin's basically testing it right now as a level of resistance. I would like to see Bitcoin break bullish out of this, because if Bitcoin does break bearish out of this, well, that means that Bitcoin is breaking this uptrend of support that constitutes the tendency for Bitcoin to make higher lows. You guys know about that. We don't want to see that happen. I would very much like to see Bitcoin hold that. And also, Bitcoin has had a tendency lately to break downtrends of resistance and potentially even just trade straight sideways out of them. I would like to see a bullish breakout coming from this. Now, with all that said, what I would like to see doesn't really matter for the technicals. What is actually going to happen here? Well, an interesting thing shows up on the Heikin-Ashi chart, and I have an entire video dedicated to the Heikin-Ashi chart in the course, because Heikin-Ashi is a very, very good tool for when you're trying to discern when a rally is about to start or when a downtrend is about to start, and deciding when one is going to turn into the other. And there's a very interesting thing showing up on Heikin-Ashi right now, because if we look at Heikin-Ashi, Heikin-Ashi is currently green. We can see the Heikin-Ashi candlesticks are green. I don't have time to get into what Heikin-Ashi means right now. I have an entire video dedicated to it in the course if you guys are interested, link in the description. But basically what we're talking about here is that green Heikin-Ashi means that the market is generally moving up, and red means that the market is generally moving down. That's a vast oversimplification, but for the sake of this video, that's basically what we're looking at here. But one thing is very interesting, because we've seen Heikin-Ashi turn green, but we've seen that happen many times back over here. Once, twice, 3, 4, 5, 6, 7 times. That's not what's most interesting to me. What's most interesting to me is how it's lining up with the MACD. As you can see down here, guys, the MACD line is looking like it's about to cross the signal line in the next couple of days. And since we're so far below zero, the MACD has a tendency to move back towards zero, and we're already pointing in that direction. So the MACD line is almost certainly going to cross the signal line in the next 48 hours out here on the daily chart, on the Heikin-Ashi chart. And that is very interesting that that's lining up with the Heikin-Ashi turning green, because one thing you like to use Heikin-Ashi for is figuring out when a new rally or a new downtrend is starting. And one of the ways that you can get confirmation of what the Heikin-Ashi is telling you is the MACD. When Heikin-Ashi and MACD line up, as they oftentimes do, that normally is a very strong confirmation that a new rally or a new downtrend is about to begin. And I can give you a lot of examples of that. Right over here, we had the Heikin-Ashi turn red, and just a few days later, we saw the MACD cross bearish right down here. Right over here, we saw Heikin-Ashi turn green, and a couple of days later, we saw a little bit of decline. MACD turned bullish, and we went on a rally. Right over here, we saw Heikin-Ashi come down here and turn green, and we saw MACD line come down here and bounce off the signal line and turn green. You see this happen a lot, where Heikin-Ashi will go green, and then MACD will cross bullish, or MACD will continue to stay bullish or reinvigorate its own bullishness, however you want to describe it. My point being, when those two indicators line up, the Heikin-Ashi candlesticks and MACD lines up, typically that is going to signal, more often than not, that a new rally or a new downtrend is forming. And right now we've seen Heikin-Ashi go green, and MACD looks like it's about to turn bullish. I'm very happy to see that, because we've seen Bitcoin trade sideways here for the better part of the last month. Well, really the better part of the last 2 months. A lot of September was sideways trading as well. And I do think a lot of that volatility is going to start slowly coming back into the market as 2018 ends, and so too does the accumulation phase that we're currently in come to an end. I think we're going to see a lot of that volatility and volume and retail interest and institutional investors interest and mainstream media interest start slowly, gradually flowing back into the space. It's not going to be massive. We're not going to see some kind of December-style mass adoption event happen in the next couple of months, I don't think. But it is going to start slowly coming back, and with that, I think we're going to see some of this volatility start to come back. I think most of the really low volatility that we've seen is over. There's definitely some in the future, guys. We're probably going to be trading sideways quite a bit again, but we're going to see some rallies and downtrends forming before that happens, and I think this is a good place for Bitcoin to have a little bit of a bullish breakout moving into the rest of that. And that's very interesting also, because I think Bitcoin does need a little bullish breakout right here, because not only would that see that Bitcoin breaks bullish out of this, gets away from this uptrend of support that we don't want to see Bitcoin break out of, it also does mean that this downtrend of resistance that Bitcoin has been under for pretty much all of 2018 would finally be null and void. We do want to see Bitcoin get away from this, because even though I don't put that much weight on this downtrend anymore, it is still relevant and people do still look at it. So I would like to see Bitcoin properly get above this in a very obvious way so that we can stop looking at it, because this downtrend just doesn't really fit technically as much as it used to, especially as much as it did 4 or 5 months ago. Anyway, that's basically what we want to talk about on Bitcoin, but there is one more interesting thing that I think we should look at, and that has to do with the shorts chart. Guys, I haven't talked about the shorts chart in the last couple of months because the shorts have just been kind of weird here. They've been just kind of trading up and down right here. But there is something interesting that we want to look at here on the shorts chart in the last couple of days, and that has to do with these 3 red candlesticks right here. Now, of course, shorting is basically the opposite of longing. You're betting against the market, and you're betting that the market is going to go down by borrowing someone else's Bitcoin, selling it at current market value, and then covering it later at a lower price. And to see Bitcoin shorts going down means that a lot less people are betting against the market, and that there's a lot more buying pressure going into the market, because when a short gets closed, that puts buying pressure in the market. And we've seen about 5,000 shorts here on Bitfinex disappear over the last 72 hours in these 3 candlesticks right here. In fact, if this were a normal chart, this formation right here, this candlestick formation, if you use candlestick analysis, would be called 3 black crows, because you see 3 different candlesticks about the same size, and they're all red. And typically that is a continuation pattern of a lot of bearishness. Now, that doesn't necessarily apply to this, because this is not a price action chart. This is a chart of the shorts. But it very well may have some kind of importance, as other people are going to look at this and think the same thing that I just did. Probably not that important. But my point is that shorts are going down, and it's probably going to keep going down a little bit, especially if Bitcoin does break bullish above this downtrend of resistance, which Bitcoin's going to either break up or down in the next couple of days. It's probably not just going to trade straight sideways out of this again like it has before. I don't think it's going to break bearish, and it probably is going to break bullish. So that really all just comes down to what we're going to see happen with Heikin-Ashi, with the MACD, with the shorts chart. Tell me in the comments section down below what you think is going to happen here. Do you think Bitcoin's about to break bullish out of this triangle pattern? Do you think the shorts are going to keep going down and giving us more buying pressure so that we can continue moving up from here? Or do you think Bitcoin's going to trade sideways out of this triangle pattern like Bitcoin has had the tendency to do so often as of late? I'm interested, as always, to hear your opinions in the comments section down below, and also in the Cryptocurrency Technical Analysis Academy. If you guys want to learn how to do technical analysis the way I do technical analysis, there's a link to check out the Cryptocurrency Technical Analysis Academy down in the description down below. The course has been live for about a month and a half now. We haven't had a single refund, and honestly, not even a single complaint. If you guys go in the course, you buy the course, you can look under the comments section of every single video, and unless I'm missing something, I'm pretty sure we haven't had a single complaint. I've had a couple of recommendations for what we should do with the course, and normally I go through with what the people recommend, because people give me good recommendations, but I don't think we've had a single complaint so far. So definitely click the link down below and see what we have to offer there. I'm very happy with the product, and I do think it's well worth the money. Anyway, guys, that's going to do it for this video. I do want to thank each and every single one of you for watching, as always, and I will see you guys in the next video. Peace.